Um, as far as first-time homebuyers, what is needed? I mean, hey, I want to buy a home. Where do I go? Where do I start? Well, first off, call me. Okay, call me. I'm a licensed loan originator and I can help you get pre-qualified. The biggest thing that you need to know is you need to find a basis of where you're at, what your debt ratio is, what your credit scores are, how much you can afford. That's the most important piece. So call me. I'll walk you through it. There's no obligation. I'll walk you through it. Let's check it out and let's tell you some good advice on what you can expect. But here are the three things that you're basically going to need. First, you're going to need pay stubs. You're going to have a bona fide qualified job that you're working. And we're going to get into income differences here in a minute. Second, we need to have your bank statements. Okay. Why do we need your bank statements? Well, basically, we need to verify that you have money in your bank and you're able to come to the table with that, because there's always closing costs and other things, your appraisal, the title costs, the inspection fees, all those things that are needed when you buy a home. So we basically verify that 3.5% down in your checking account or your savings account or your 401k account, which, by the way, is a great way to actually get your down payment. Borrow it from your 401k. So we look at your bank statements. We look at your pay stubs, 2 consecutive pay stubs. If you only get paid once a month, great. I need 2 months bank statements. If you get paid twice a month, great. I need 1 month's pay stubs, and they're consequentially, sequentially in order. Okay. Last thing we need is basically 2 years taxes. So 2 years taxes. The Form 1040 is the IRS form for your standard personal tax returns. A W-2 is where that income is reported and you file that with your taxes. So for FHA, typically you're going to need those 2 years tax returns and your W-2s. Now let's move back into conventional a little bit, because on conventional, sometimes I don't need 2 years taxes. Sometimes I can base it off of 1 year's taxes with your W-2. You're a W-2 employee, you get a salary or your hourly, and I can just use 1 year's taxes for your income validation. FHA is always going to require 2 years. So conventional sometimes is easier as far as qualifying because you don't have 2 years taxes. But it's definitely better to have your 2 years taxes if necessary. That brings me to another point. Do you need 2 years taxes in order to qualify for a loan? Well, standard is 2, 2, and 2. 2 months bank statements, 2 pay stubs, and 2 years taxes. But there are programs out there that allow us to help you figure out a way to get into a home without those 2 years taxes. Let's delve into 1099 or self-employed. Typically, if you're 1099, which means you're a contractor for somebody else, work for another company, you are going to need 2 years filed taxes in order to do that. Although, once again, reach out to me because I do have a couple of programs that aren't necessarily as stringent in that requirement, and we can go off of your 1099. Sometimes if you haven't filed your taxes, I can go off of 2 years 1099s instead of the actual filed taxes, and that can be a good thing. But just remember that sometimes there is more required as down payment if that is the case. Job stability. Job stability is one of the biggest things with FHA. They want to see that you are actively employed and that it's not something that you change every other month. For example, if you have 3 jobs or more in any given year, FHA is going to over scrutinize that. They don't necessarily like that. They think you're a job hopper. So if you are going to change jobs, but you also want to buy a house, wait on the job change until after we get the home closed. And by the way, never change jobs during the midstream. I just had a situation where I had a client that were fully underwritten. Basically, we're approved, ready to go, and they changed jobs a week before they were supposed to close. Which, of course, then we have to revalidate everything, verify the new job, get a verification from the old job, verification from the new job, start time, when they're going to get paid. I mean, it can create a mess. So never do anything major during the time when you're buying a house, like changing jobs or buying a new car or something like that. It can create a mess. And of course, we love to see good payment history. If you got a credit card or a car loan or something like that, make those payments on time. Even if you have rent that you've been paying, you can actually have that rent reported on your credit report as good credit history, which is not necessarily a bad thing. So